Like hard pass on that.
I saw this TikTok of this woman who was at a judge Judy court sort of situation, and she's suing the pastor of her church because she had confessed to her pastor that she
Right.
had cheated on her husband,
And he
but
told
and then the pastor told the husband, and
yeah.
now the woman is suing the pastor for $25,000. Um, and I just love the mentality of it, just the mentality of, well, he shouldn't have
Right.
told the truth. I was like, were you under contract with him not to say anything? He's a priest.
No, he wasn't a priest. A priest has a
Pastor, sorry, he's a
duty for
pastor.
a pastor
Like,
does not.
I know, I understand, but a pastor has the if ever you're gonna be like, let me bet on the person who's gonna want to tell the truth or not, it'll probably be the
Be
pastor
the pastor, yeah.
over a teacher. You'd be like, okay, but the pastor might have some inclination.
It'd be
I
weird if
mean,
the
I've seen
pastor
friends do that. A best friend will be like, well, you shouldn't be cheating on your boyfriend, and it's just like, you know, have the divulge, just make sure that the boyfriend finds out. Well, she shouldn't have done that. She's your best friend, yeah, but she shouldn't have done that. Okay.
Can you imagine if the pastor was like, "You know what? This will be our secret. We'll keep this between you." How can he do that? First of all, don't tell your friends you're cheating. Don't tell me. I'll tell, that's
I'll
for sure.
tell everybody.
I will tell. Don't
When
tell
people
me.
tell me, "Can I tell you something? I don't
Nope,
want you to tell anybody." Do
nope,
not do that.
don't do that. Do not
Don't worry.
carry any
I'm on the
secrets.
side of Empire. Did you know that? I'm on the side of Empire.
District 1.
Pretty sure I'm trying to get to District 1. I'm trying to tear it down. All right, let's if Candace, everything crossing my path, I'm tripping her. That's what's happening. Um, don't tell me any secret. I don't know anyone's secret about anything.
Yeah.
Anyways, AI is not something to be feared. Or sorry, it is something to be feared, but so is God.
I'm afraid
God's
of God
gonna
too.
rout you out. There's no escape from His holiness, and there's no escape from His child AI. And that's just what's gonna happen. And it's like when I saw on that All In podcast, Chamath Palapatiya was saying, text everyone, email everyone, call everyone as if everything is going to be ousted because it will be, and behave, just behave it's all public, it's all over. And this, I was saying this to years ago. I go, this privacy. We give up privacy and autonomy. We don't even. We'll click a EULA agreement. We'll click agree. We'll click accept cookies just because we want to get into the site to buy donuts or whatever. Like we don't even care. We don't even care about. We will give it up for freaking nothing. So that's what's going to happen. There's no way around it. Everything is going to be, and then just enjoy your time in prison or ostracized from society, and just understand that. Teach your children not to do that, and the next generations will grow up in a world understanding there's no privacy, and we're on the path of telepathy here. So let's just do it. Okay, let's just do it. We all die in the end anyway. Bill Heck says that, and it was stuck with me. You know, you die at the end of the story, right? So just freaking live your life and be done with it.
But it's death the end.
Sorry?
It better be. It's death the end.
No, that's the most worst part of it. I wish it was Oblivion. I wish it was like Severance. You just go in the elevator and you're gone. No. What the worst case scenario is that you die and you the next moment it's as your memory of your past life is still there and you're trying to scream to let them know, but you don't know how to speak the new language and that's like, oh my god, I got to do this again. That's why babies are crying all the time. It's like, no, 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 I got to do taxes again.
I like the Christians. I'm like, you know, so you go to heaven and then you're supposed to worship God for all eternity. Okay, so after a year, 10 years, it's pretty great. 1,000 years, 1,000,000 years, 1 billion years. And God's like, you get
Keep
down,
praying.
keep praying.
Kneel
You
down on those nails and keep those cans up in your hands. Keep praying. I want you to mean it.
I asked AI yesterday, we got to get on, but I asked AI yesterday, what would it be like to be in hell? But tell me over periods of time, 1 year, 1 month,
It
1 year.
described itself.
After like 1,000,000 years, basically you lose concept of who you are and memories of anything, and you're just I don't even think you have any conscious experience of being in hell. Um, your consciousness would fracture, and uh, you become a nebulous nothing. Like you are not experiencing suffering anymore. And if you think about it, you're like, how can I burn for eternity for 1 trillion years? And oh, wait, after 1 trillion, it's not over.
That's right.
There are trillion years. And oh, wait, it's not done yet. There's even more trillions. Make it make sense. That's my favorite thing the kids say these days. Make it make sense.
You have this roving moment. A dog's is this big, yours is this big, the sun's is this big, and it's just this roving moment that you can't remember. I mean, once this clicked in my head that people think that death is this darkness, right? And you go, oh, it's the opposite of that, which might be worse, but whatever. It's the opposite of it. They go here. I was telling this to Freddie. You can't see the past. You can't see the future. Of the now, you can't see most of whatever is happening now. You can't even see behind you. All you see is this much, and in this much, most of it is blurry. It's just this much, and in this much, your brain is eliminating an infinite amount of information so that you could even just see me. And even as I'm talking to you right now, you can't remember what I said 1 minute ago. You're dark. You're in the darkness. So the dark is so dark right now that you can't even see that this is all you're seeing.
It's a sliver of
And
light.
that darkness is imposed by this suit, by the environment. So you think, I close one eye, I see less. I close another eye, I see even less. So when I die, I must see nothing at all. It's the eyes that's causing the blindness, buddy. So once this is gone, you're going to have this opening up, which is its own can of worms. Because as we've talked about before, somehow, if that's where we were or whatever, we decided none of that. We're coming here.
That's
I
right.
want to be a Palestinian. I'm coming right here. No, but you're going to be killed, bombed to death. You and your 5-year-old. Still better.
Better than what I
And
came from.
whatever it is, right over there. Come back over here. Let's do Palestinian again. Do Gaza again. All right. The right moves. Peter, this is a show about making money off
Is
of
it?
the disaster of being.
Right.
Okay?
Okay, good.
There's the
You gotta do
tagline.
something. You gotta do something with your time. Might as well make money. My mom told me, she's like, what does it profit a man to gain the whole world and yet lose his soul? And I said, well, I mean, he gains the world. She's like, what? Wait. Oh, wait, I guess you're right. I go, yeah, there's people who lose their soul and don't even gain the whole world. So, I mean, at least you gain the whole world. She's like, yeah, okay, you're funny. Let's gain the world, Tom. How are you going to make us gain the world?
Well, first up, I wanted to talk about Cardano. I figured I'm going to want to talk about Cardano basically every show whenever there's something relevant. And this week, you were sending me a tweet here that Cardano was going to be a futures contract standard futures contract for Cardano is going to be set up on Coinbase. And I was scratching my head a little bit because I thought Cardano futures was already on Coinbase. But those are perpetual futures as opposed to standard futures. And so just the general idea here is that a futures contract is a promise to buy or sell an asset at a specific price by a given date. So if you're a farmer and you need oil for your farm and you want to be able to plan your expenses out, you go, hey, it's $50 a barrel now. I'm going to buy it now at $50 a barrel. So whoever's on the other side of the contract will deliver me oil at $50 a barrel, even if oil goes up to $100. So I save money on that. Or if it goes down to $25, I still have to buy it for $50. And the other person makes money, but I'm okay because I have a fixed price I could plan for the price what my oil would be. In the crypto space, the futures contract is not like in the vast majority of circumstances you're not going to get delivered the actual crypto at the end. It's cash settled. So you're making a bet directionally that, hey, I think in 6 months, Cardano will be lower than it is now. And so I'm going to sell it now. And when it goes lower, I'll be able to buy it back. It's basically like spot, but futures, something happened in the future. And then you also get to leverage it. But for perpetual futures, which is a type of futures contract that only exists within the crypto space, it's like you get all the benefits of the leverage of the asset, but it never actually expires. So you never actually had to deliver it, which means you could hold this perpetual futures contract indefinitely.
That sounds great. No, why would you ever sell it out of the money?
Well, if it's a losing position, you might be like, I'm just going to sell it eventually. Plus, there's a funding mechanism where, because you wouldn't want the futures price on a perpetual futures contract to get so far out of whack from the underlying spot price. It would just be crazy and be untradeable. And so, it's like, what are you trading at that point? Some other asset doesn't even exist. And so, there's a funding mechanism that, as it goes up or down, the people on the other side of that trade have to pay, like, whoever's the futures contract is this. Uh, there's a you have to borrow the asset to be able to short the future, and so you have to pay this funding fee in order to hold that position. So as the price gets further and further away from the spot price, the funding increases for whatever side you're on, whatever side is against that price move, and then there's an impetus to like sell off that asset or to close your position in order to not to be eaten out by that funding rate. Anyways, I try to make this short, but didn't make it short at all. In fact, that's just the full story of it. Um, but a standards futures contract does have an expiration, and so there's this incentive to, well, necessity to close your position before the expiry, which causes all these sort of movements within the futures contract. It also allows institutions to hedge positions that they're in. So let's say some institution has a $1 million worth of ADA, and they're going to want to sell that ADA in 6 months because of whatever strategy they had. They know they're going to sell this ADA in 6 months.
Yeah.
And so what they could do is take the 6 months contract and sell it now. They sell that contract now. So they've basically hedged their position. So that if the price of Cardano drops, let's say it drops by 50%, they have an obligation to sell that. They sold it. So they have an obligation to buy back that contract, but they don't have to buy it back at the price it is now. They could get to buy it back at 50% cheaper. So they make that difference. They make that 50%
I
in
see.
profit, but their current ADA million they're holding also dropped by 50%.
Right.
And so they make that difference. So they lose 50% on the value of the Cardano they have now, but they gained it on the futures contract and now they're whole. So they get to hedge their position. Um, and if it goes the other way, they sold it and Cardano goes up by 50%, then they owe that extra 50%, but their Cardano went up by 50%. And so they hedge it that way. And so you're able to make, and that's just like a simple idea, but there's all kinds of different plays that you can do when you have a futures system available. Institutions can actually make moves as opposed to, well, I guess I just have to buy this ADA and hope that it goes up or whatever it is.
So this news for Cardano is they're going to offer futures on what was it, Coinbase?
On Coinbase, that's right. So
And
it
is there
increases the liquidity base for Cardano.
is this the first place where futures for ADA are available, or was it available on
No,
hundred
but
percent?
it's one of the major platforms, right?
Was it on the other major platforms, or is
I
this
know
something
that it
new?
was perpetual futures were there, but I don't think it was on. I know it's out there. It's not on Gemini, which the next thing, the Winklevoss twins, their platform, it wasn't there either. And so, regardless, because the big players didn't have it, liquidity is much lower.
So how big is
Which is,
this news on a scale from 1 to 10?
well, we don't know the reason why it's big. So I would say I would say it's a 7. I would say it's a 7 because had they just been added at the beginning, like with a bunch of other tokens, like Bitcoin and Ethereum, what have you, it would have just been like a non-story, right? But the idea here is that with King Trump, who tweeted out ADA, it forced ADA into a conversation where people are like, "Wait, what's going on here?
Right.
Why isn't ADA tradable on Gemini and on Coinbase? What's going? Why are there's so many articles about Cardano that are negative from Cointelegraph, from whatever, all these different platforms, but they're being tweeted out by the president? Oh, and they're like, oh well, he only tweeted out because he only tweeted out like the top coins. Wait, it is a top coin? What?
Yeah, I
As
know. When I heard that, I was like, when
what are you
people were
talking
like,
about?
"Oh, he
You
only,"
only did it because it was a top coin.
yeah.
What? So a drive-by guy will look at things and go, "Oh yeah, ADA's at the top thing, but it's not on your platform to trade." And so if you
Yeah.
wanted to have a basket, let's say you wanted to go out there and go, "Hey, all the ones that Trump tweeted out, I want a basket of all those goods." And you go, "Well, you can't get the ADA one." What? And so it shows that it looks like this is forcing of the narrative where people go, "Okay, well now we have to. Now it looks stupid. We got to be defending it before they can say it's a zombie chain, a ghost chain, and no one's even using it." And like, well, President Trump tweeted it, so I
And
don't know what you're talking about.
they're gonna be
He
buying
didn't
it,
tweet
right?
Pepe. He didn't tweet anything else. He tweeted the Solana, XRP, ADA, Bitcoin, and Ethereum
And the plan is that
in that order.
they're gonna be buying this at some point? Is that it?
Well, it's not that they're going to be buying it. They want it as part of the strategic reserve, and currently they're just saying whatever's been confiscated through criminal means is what's going to be in the system. But that doesn't matter, right? The idea is they're talking about it.
Right.
And so now that's a consideration other people have to make. And if you think at all that ADA is undervalued, always hit that term, whatever value it's at, it's the value it's at. But if you think it will gain value in the future, then you go, okay, then you want to buy it now, even a small position. And if 2% of the world just allocated their money to Cardano, Cardano will be a bleh. Um, so that momentum is interesting. I love that discussion that's happening there, especially on the heels of actually when I just pulled this up, just a couple of the salient points here that's been happening in the crypto world. So you have all right. So the Plum and hard fork. This is the first community-driven hard fork. So basically, up until now, the Cardano, I believe the foundation itself has been handling the forks of Cardano, but this is the first one, CIP SIP 1694, that the community voted on and released. That means that the governance system of the platform is actually in place and working. Where it's in the hands of the people now, like Charles has been saying, it's in the hands of the people, and the community can decide to do with it what they wish. We had, reduction of the treasury tax from 20% to 10%. That hasn't gone through yet. The expanded ecosystem. So we have almost 2,000 projects building on the platform as of February of this year. And it's a stable number reflecting consistent growth. So there's another thing. As people are seeing Cardano more and more places, you have to remember most of these people aren't partisan, right? They're just seeing Cardano for the first time. They look it up and they go, "Oh, it's active. Oh, it's robust. Oh, there's all kinds of things happening here, and it's interesting. Their use cases. Let's take a look. Let's give it a try. Let's buy it." Let's see here. Plutus, I'm very excited by. There's all kinds of new technologies that are developed. This one here, I don't know if you've seen this before. If we talked about it, this is Aiken language. So basically, it's a programming language to make smart contracts on the Cardano blockchain.
Interesting.
So I'm actually trying to spin one of these up right now just to try it out. But essentially, it's like this suite for programmers. It's super useful to have something like this. And what I like about it now is that you can feed it into AI, and so you have to sit there and bang your head against this. You be okay, AI, feed it the documentation. Now let's write a smart contract that allows me to loan this amount to Peter under these conditions that get resolved in this time, right? And see how that works
Right.
and settles out.
I will tell you that years ago, when I was first hearing about smart contracts and all these things, I was like, who's going to be able to build this stuff and write the code for
Right.
this? I was like, this is going to be a long time before this will be useful to the average person. But with AI now, like, you're going to have, you're going to tell the AI the smart contract you want, it's going to output the code, and that'll be it.
That's right. It's one of the reasons why people were so eager to jump into, let's say, Ethereum or Solana network because of the ease of the environment to write. Um, because they weren't using formal methods or anything like that. You can argue just spinning up something and getting it running much easier. Like people can go on pump.fun right now for Solana and just issue your own cryptocurrency token.
Huh.
I mean, the same thing is true on Cardano, but the idea is that the fundamental basis of it is this formal verifications method that makes it far more secure, and you can more readily rely on it. Whereas, you know, we've seen hacks all the time that happen on Ethereum, and so that's to me that's exciting. And you're right with with the development of AI. it really propels a number of projects that can get out there. So they did the whole what was it called? The governance, right? The governance of the basically the Cardano Constitution has been ratified, and now they're issuing out. Basically, now the community is getting together and making decisions for how to market Cardano, how to basically pimp it out. Now that it's basically feature rich, and so to the point where um, Charles is focused on Midnight, the Midnight token, which I think is going to be the next big thing for the
Right.
crypto space that actually allows for privacy within crypto, which is not something a bunch of people are talking about. Like we did have this one with Monero, right? Monero XRM, I believe it was called, was supposed to be this privacy token, but you saw what happened to that. It got blocked off of everywhere, right?
Why?
Because it allows for transactions to be private. And so people don't want to trade the coin. But with Midnight, the way that they're tackling it is that it's not the blockchain isn't entirely like that, right? It's a native token on Cardano, and so you'd have to basically block the entire Cardano platform at the same time. So with Midnight, you wouldn't be able to do that. And then with Babel, with being able to transact with the Cardano network using any token you want, you don't even need to have ADA to do it. Now you have a mechanism to, it's not released yet, but you would have a mechanism to get into the Cardano network, do things privately, and then exit without anyone really being able to stop you. So I don't know all the ramifications if that extends to ID systems, if that extends to if you have to do like certain operations off chain and then load certain information on chain. So there's a whole component where it's not blockchain connected. I don't know what all that is, but apparently Midnight is going to be coming out this year. So let's call it next year. And it should allow for the privacy. And so if you don't have that on Solana, you don't have that on Ethereum, and you don't have that on Bitcoin. And
Right.
Bitcoin arguably is the most transparent of all the blockchains. And so let's say you did want a stable coin or transactions for the government or whatever it is put onto a blockchain, you would want it to be, you would want privacy.
Right.
And Midnight is the only thing that I know that's talking about that. So it's very exciting. And then you have all the optimization features, Hydra, Laos, a bunch of things in order to make a Cardano better. So I'm paying attention to it. Nothing I'm seeing so far is making me doubt the roadmap. I love the messiness of what's going on with the governance and the budgeting of the platform. Feels very much like what is it, the Federalist versus the I forget the other name, but basically at the beginning of America, there's the debate between centralization and decentralization. That was like generally the idea: states' rights versus federal control, and central bank, no central bank, uh, all very fascinating. And you want that sort of conversation, that sort of discourse, and it could lead to something really great afterwards. So pretty cool.
Will you be able to use other tokens in the midnight protocol, or is it just
I don't know. I assume what it is that because the idea of the Babel is that the you use your fee, it goes in. There's a system that still uses ADA underneath the hood with validators, where they're basically the intermediary between that. But how then Midnight happens, how that converts to Midnight, and how that's used, I don't know. Um, so I'm not too sure about that. But it's proof of concept too for the platform, because then someone else can be like, hey, I'm going to make my own privacy token with these sort of features to it, and also issue it on the Cardano system. And what's great about native tokens on the Cardano network is that they're first class citizens. They have all the same features, access to all the same features of the blockchain as ADA does. Versus some
right?
other change, you don't have that. Like the native token has full access, and then the, the secondary ones don't. All right, so that's Cardano. So that what does that mean? It means that we could have increased liquidity. So increased liquidity more within the space, which means it supports the price more. It supports adoption a lot more. It increases the amount of metrics that appear on the system that shows health and growth within the system. More institutional players can get larger positions on there, and you might see a performance increase over time. Um, you get increased credibility, right? The idea that Coinbase says, okay, now we're going to add you on. It means that, okay, people go, it adds to the credibility of the system. Versus when you hear about some meme coin, you're like, well, the only way you can get it is that you use your ledger device connected to Uniswap and transact with this contract. Only this contract. Make sure you don't do another contract. You bought the fake one. I've always you bought the fake one. So you get more credibility that way, and it makes it greases the wheels for other exchanges to adopt it. Because, if one exchange says, "Oh, we adopt 100 tokens," and the other one says, "We have 101," you go, I guess I'll go to the 101 one. Why not? They have more, and so it increases the odds for that. The downside is that we might get a lot more volatility. So, in the same way that institutional players can participate in order to increase the price, they can dump, and
Right.
they can manipulate the price in order to cause flash sell-offs and washouts and liquidations that happen within the space, which then leads through to the underlying asset, the volatility for underlying asset, and they go, hey, look, that's what you get. You get the stability at a lower price, or more volatility at the higher price, and volatility means volatility both ways, go down and up. And so watch it with your leverage. That's what can happen with any asset. All right. Second story. I wanted to touch on this little thing I saw last Friday, which I thought was pretty interesting, and that is Ken Carson was interviewed. Okay, so here's the thing. So we've been having a sell off in markets, in equity markets and crypto markets over the last since February 20th, right? And we talked about before this idea that the February 20th to March 20th window is a window of weakness that appears every year. There's 4 periods of weakness in to February, March, to June, July, to September, October, and then December, January. The thing is, the periods of weakness for December and in June are not normally cataclysmic because people are on vacation. And so there's less volatility that's happening around that time. And so it mostly squeezes out between September and October and February and March.
Hmm.
And so what happens is that there's periods of liquidity that ebb and flow. Liquidity is the availability of dollars at any given time. And you can imagine if there's low liquidity, the market's more fragile at those times. And so if something happens, you can get exacerbation towards the downside. So right in the window, February 20th, March 20th, we get this drop. So actually, let me just pull a chart here real quick. Oh, you can still hear me, Peter, right? Mic's still working?
Yes.
Okay, perfect. So we had this drawdown in the SPY. So with this drop here of 10%.
Wow.
And it happens regularly. Like corrections, this is just a normal correction. Over here, well, the famous one is COVID. This happened too, February 20th to March 13th. The next drop, where was the next March? Here, February 20th to beginning of March. This was a 5% drop. We have here February 20th to March 8th, 10% drop. So these periods of weaknesses happen pretty regularly. Again in March over here,
Yeah, but the most
February
current one,
ten
uh, I,
percent
wa-
drop.
I watch CNN, and I know the most current one is because of Donald Trump. He said and did things. I don't know what exactly, tariffs or something, but he's tanking the amazing economy that Joe Biden left him. So,
Well, that's the thing. If within the window of weakness, a catalyst will have more effect,
mm,
especially a downside catalyst. And so it's no wonder that we get a pretty decent pullback over here. The question, and the same thing is happening within Bitcoin, right? So we have this drop over here. So this is February 20th top, and then went to the low of 20%. Right? Makes sense. Here's what's the interesting part. We have, let's go back to futures. All right, if we toss on our indicator, let's do show our weekly levels. All right. So just to show our weekly levels here, this is our indicator set from us from Ticket Profit, soon to be available to everyone for free. Right now, you have to contact me directly in order to get access to it. And basically, you see here how we pass this level, we bounce at that level. These are weekly volume weighted average prices, VWAP levels. We bounce over here, and then we bounce on over here, right?
Right.
And so the thing is that there's actually another level down here. Oh, why is it not extended? Not... All right, I guess it's too far. But there's another level down here. 1 second. That we still have to get to, or that we could still get to. This level over here, which would coincide with this yearly moving average that's moving up, which is often where we bounce around. So we often use that as support. Over here, this was support towards the downside. This is where we broke above that level. That's where we normally go and touch again and again. So that yearly average like shows up again and again and again. And the question I had is like, did we get enough of the air out? And since it's just March 16th and we're headed into the final week of this window of weakness, I wonder if we can get a another drop down. And so I thought it was pretty interesting. I just wanted to play this because I think it's a little wonky, but I like wonky things. And this is Ken Carson, who is I believe, he's the managing director of Kai Volatility. He manages investments in the option space. Very, very knowledgeable. And he's been calling all these window weaknesses, all these drops, all these rises, almost sometimes to the day, to the penny. And here he is being interviewed by CNBC. Right. 1 second. Let me know if you can hear this.
Tonight, hopefully, with Rick Santelli. Rick, it is interesting that so many parts of the bond market, even high yield, junk bonds, they haven't really moved as stocks have fallen. It's a little weird.
It's a little loud.
Yeah, it is weird. And stocks are the dynamic affecting fixed income. And you know, there's a lot of inflation out there. So today, we have guest inflation. Instead of one guest, I have two guests. Let's get right into it. We have Mike. We have Chem. What do you think about volatility here? Is it giving us any clues? Not volatility like choppy, like implied market option volatility.
Well, we had a pretty good, the administration came out and really told you what they were going to do. They're trying to take down the economy, take down the market. They weren't going to stand in the way. So it's well, documented. And so the volatility just hasn't been there. It's been a slow burn move down. The problem with slow burn down is if you have a hedge, it's not helping you here. And sometimes that can be the pain trade. Not the big vol explosion that everybody thinks. And for a lot of these hedge funds that are having the multi-strat that are having problems, that's probably the worst case scenario as well, because as the vol gets compressed, things start moving away from each other. You get dispersion and a correlation breakdown. So I think that's a little bit of what's going on. It's actually a pain trade.
All right, just to explain here, Peter, does that sound like gibberish to you?
No, but it's not the first time I've heard it.
All right, so just the idea for anybody else, the idea here is that when you're putting on a hedge, which in this case would be a put to the downside, you're paying a certain premium, paying a certain amount that says, hey, if the stock market drops by this amount, let me go ahead and you have to pay me out this insurance contract. And the thing is, the faster that happens and the more dramatic the move, the higher your payout. And so what he's saying over here is that people are buying hedges, but because the price is incrementally going down in this very steady way, even though it's been a big drop from the top 10%, it didn't all happen in one candle. It's been this stair step down. What happens is that when you buy that hedge, the protection to the downside, the price of that hedge is already high because you're already headed down. And so you didn't buy it while it was still low. Well, the price is up. You bought it when it started to go down, and so you have this high premium you're paying. And so then you're expecting, and you need an even bigger move in order to one, make money or even make that hedge break even, right? And you're not even selling the hedge at a break even because you're putting it on to protect yourself against the downside, so you don't even really sell it if it gets back up to zero. And then as the price keeps stair stepping down, over this period of time, you have to keep buying that hedge in again, right? So if your hedge is for the day or for the week or whatever, you got to rebuy the hedge at a higher price.
Right.
And then you buy it at a higher price, and then it bleeds out slowly because the price doesn't like knife down like you're hoping, and you keep having to bleed this pain. What she's talking about is the pain trade. The pain trade is whatever in the market causes the most amount of pain to the most amount of people. That's where the market goes.
Right.
And so here, the most amount of pain is we keep going down, but steadily. So you can't take a wild bet, 10% down or something like that, because it might not get there in the time that your hedges is planned for, but then it might still get there after your hedge is expired.
Right.
So that's what he's mentioned in there.
Trade as vol comes lower.
What do you think?
I think the correlation story is a big part of the story. We've seen about a 10% sell-off in the market since mid-February. Now, what we'd seen prior to that, it was just saw a market where, S&P 500 would be not moved that much, but you'd see big moves up in Amazon, big moves down in Tesla. That compressed kind of index volatility. When volatility gets correlated, things start moving fast, and that's sort of what we saw over the last month. Now, today, we're rallying. We're seeing volatility come in. We're going into a weekend. Things are quieting down for today, but I think we've got some catalysts in the future that we got to look at.
Just because the big boys are doing something, does that mean they're going?
So there he's talking about that bounce that we saw at the beginning of at the end of last week, where we had a bounce up both in Bitcoin and in equities. Where this bounce up, so people go, volatility is lowering down, safer. People don't necessarily want to go into the next week and not be exposed to the market, right? Because if that's the low, they want to come back to the market and it's up 5% on Sunday, and so they buy back in on the weekend, or they cover their shorts. So if you've been shorting all week, you cover your shorts and you get this bounce back up. So these flows that come in. Which I believe Cam is about to talk about right now, Vanna and Charm flows.
Going to be right?
Oh, absolutely not. And actually, what's happening right now is the big boys are having to delever. They're being forced into these trades. So this is a deleveraging event. Like Mike said, I'd be a little careful here. I mean, I think you can get a little rally into the weekend. These are Vanna charm flows, and we talk so much about these buyback of deltas as vol decays. We're heading into a big quarterly March OPEX. That matters. The skew decays, and that sends deltas back in the market. But those are structural flows. And when those go away, you may not have anything behind it.
Mike, you're...
So that's the thing I wanted to point out here that I'm almost worried about, because the idea here is that, actually, let me just finish this and then we'll talk about it.
Final thought, the last 40 seconds. If you had to sum up, how's the Fed going to deal with this?
I think next week it's looking like we're not moving rates at all. Now, we have about a 30% chance we cut rates at the meeting in early May. But I think more importantly right now, we're not looking at this event-driven, let's look at volatility going into events. We're getting events out of nowhere. We're getting news about tariffs, all this stuff, very unexpected. So you kind of can't look at events the same way. We're having an event almost every day right now, and that's something to think about.
Watch out for those...
All right. So he's talking about there, first of all, Ken was talking about the idea that the flows that we're seeing at the end of the week, where we have this bounce in Bitcoin and in equities, is happening because of these forced buyers, right? So if you are, sorry?
401ks?
No, that's passive investment. There are market makers, people have put on hedges, people have shorted the futures to protect their positions. They have to then, if they've shorted, they have to buy back those positions. Or if you're a volatility adjusted fund, or your strategy has to do with the level of volatility, as the volatility ebbs out, now you have to buy back just according to your rules. And so he's saying these Vanna and Charm flows, which is in the option space, these positions that need to be covered, they need to be bought back, causes a little bit of lift as you end the week as they take off those flows. But if all that resulted in there was a 2% bounce on equities, and for Bitcoin we got a bounce up of 9%. Then the question is, if that's gone now, if they've all bought back their stuff, what happens next week if there is a catalyst? And he's saying the option space is thinly bought. The volatility is thinly bought, which means people are still not very hedged. So if a catalyst happens and there's no supportive flows, then we can have another leg down. And I would say for SPY, we can get another look down of up to 13%. Actually, a little bit less than that. Up to 13%. Basically, to the level of oh, sorry, I'm looking at the wrong one. We can get it. Let me pull up the chart. We can get a rundown here to here, which I believe is another 6% down for the SPY, which would be a pretty big dramatic drop. And then for Bitcoin, let's call it 74, right? Double that, so 12%, which to me would make total sense for that to happen in this last week as we head into the end of this window of weakness. And the last thing that Mike was saying there, the other guy at the end, was that the Fed, right now the markets are pricing in no cuts from the Fed on the 19th, this Wednesday, which would be supportive flows. If they're going to cut, we're going to add liquidity to the market, we're going to lower interest rates, blah, blah, blah. The idea is that, okay, that would help support the bottom. But there is right now the market's pricing in no cut. And the times where the Fed doesn't do what the market is planning, very rare, very rare. Because the one thing the Fed doesn't want to do is introduce volatility. And their whole forward guidance, their whole modus operandi is that what they say they're going to do, so that they can say things ahead of time, make the market move that way before they even actually do it. So if they do not want to add volatility right now, I'd be very surprised if they did. Even though I bet on Polymarket that they would, but it was like, I'll put $20 down, you can make $600. What's I'll take that trade. I'll take that trade every month. So there's no supportive flows there, and then he's going, hey, and the Trump administration, we don't know what they're going to do one day to the next. And if what they want is to bring the market down, I'd toss out some bad news this week, some catalytic news this week, get myself another leg down in the markets, get the 10-year yield to drop by 50 basis points, whatever it is, and help to bring that down. Plus, if we take a look at, actually, I want to do that here on Sunday Fuel, but liquidity flows are not particularly high right now. They're only going to be there later. So I thought it was interesting. We could get another look down. I would not be taking any big longs this week. I'd be looking for opportunities to buy in on major dips, especially 6% down on the SPY and 12% down on Bitcoin. Last up is, I'm wondering if we should even do the story. Yeah, why not? We'll do it quickly.
Story?
This is just Cathie was in the know. Right. I just want to bring this up. Not as a thing to go like hard through, but I really like. One second,
quick, because I gotta. Let's try to knock it out quick because we have Sunday Fuel to get to.
Yeah. So.
I shouldn't eat all I can eat sushi before the show. It's.
So they put out their big ideas document. This is ARK, Cathie Wood's ARK Investment in the Know. Sorry, in the Know is the video that she releases every month, and this is their big ideas document that just they like to open source their information. And so I thought it was interesting to come through here for those who are. Actually, they cover a bunch of topics here. They cover, AI agents, Bitcoin, stable coins, robo-taxis, and the like, energy, blah, blah, blah. But if we head down to their Bitcoin section, which is, what is it, number 29? Page 29. Yeah, 29. I like looking at some of the data that they've collected. First up here is the idea that spot Bitcoin ETF has been the most successful ETF launch in history. So if we compare the Bitcoin flows in versus gold, Bitcoin has just completely dominated. Not exactly a fair thing, because that was November 2004, which is before QE, before this whole explosive 20-year bull run. Upon its fourth halving, Bitcoin's inflation rate dropped below gold's long-term supply growth. So this speaks to the deflationary nature of the Bitcoin supply, and then as adoption grows, it exacerbates the upward pressure on the price, and then that helps to lead into their we'll see later on their price predictions for Bitcoin. Over here, I wanted to show the absorption of the selling pressure. So Bitcoin, there was actually major selling this year in Bitcoin, but funnily enough, the markets didn't drop as much as you might expect, especially historically. So the volatility of Bitcoin, at least to the downside, is actually dropping as it gets more institutional adoption, as it becomes more mature. So that's pretty interesting. This is the one I thought was the most interesting number, which is the Bitcoin's aggregate cost basis hit a new high in 2024. So that's this black line that's saying that this is representing this 811.7 billion total aggregate cost basis represents about 40,000 or $41,000 Bitcoin. So you could imagine this as a floor. Like if people sell below this number, they're selling at a loss on net aggregate across the Bitcoin network, and as long as above it, they're in profit. And so we've just extended up. Basically, the floor for the price has moved up significantly.
Right.
So that means when the price comes down, we're likely to come down to the $40,000 area, which is exactly what I have on my chart for Bitcoin as the low of the cycle. Right now, the low of the cycle for me is around 39,000.
You're saying it could drop all the way there?
Well, it will drop all the way there at the end of the cycle. And I'll talk about on Sunday Fuel where I think that cycle will be, because I think the cycle top is happening soon. Actually, over the next couple of months.
Nice.
Transaction velocity. Oh yeah, so this is the bull case for ARK is that Bitcoin hits 1.5 million or by 2030, and their bear case would be 30,000 by 2030. All right, so I thought it's a pretty interesting document. There's a lot of information in here. I'm waiting to see this crossover between AI and crypto. This is why I was reading these. I wasn't seeing it just yet. I think that makes sense. That's how AI agents are going to be able to pay each other as they interact with things or surface new value that hasn't been monetized before. But we'll see. But for now, we'll leave it there. I invite you to go check out Cathie Wood's In the Know video. Whether you agree with her or not, go check it out. Nice to see someone put their whole ideas out there, as well as take a look at my Twitter. I like to share these things. If you subscribe to my Twitter account, you'll be apprised of a lot of these things that I talk about as they happen.
That's at Sacred Profit on X.
That's right. PROFIT, the only profit that matters. Oh, there's my catchphrase.
No, you want to offend 70% of the planet?
We found it. All right, Peter. That's it for Right Moves, and we'll see you next week.